Hopefully, everybody is doing amazing. And it's on Thursday. I want us to reflect on the trade that we took day. And yeah, so this is the Audi USD. I took the Audi USD, GBP USD, and the Euro USD because those were the foreign currencies I've been watching for the past few days. And now I think we can look on to these. So one start from the higher time frame, and what I did see, it may seem too dirty, but I will explain everything because I don't want to delete the narrative that I had for the day, because this is where I did start my analysis, and I want to show you how I did these analysis of mine. So let's start. And before we start, guys, remember to follow and also like the video so that we may get to learn all day every day. Remember to also follow me in YouTube, also in TikTok. So let's start. And this is the Audi USD, and what I I I was watching the daily time frame, and I noticed that something that I usually like to see. Remember yesterday we had a trade, was a winning trade, yeah, but I didn't record that because I was kind of held up. But today, we'd seen yesterday's candle printout that had given me the whole idea onto what I'm expecting for the day. So remember, we wanted to see price deliver to this level if this fair value gap, this daily fair value gap, was to hold, right? So what happened yesterday is we had this fair value gap being violated. And what do I mean by being violated? We had this Wednesday candle close below this fair value gap. So the closure below the midpoint of this daily fair value gap made this candle no longer be a fair value gap, but turn into an inversion fair value gap. And what do I mean by an inversion fair value gap? It is no longer going to support higher prices to this level, but it is going to inverse prices lower, right? And using that analogy, you've seen how today a candle rallied lower, right? So upon seeing these candle closing really heavy and turning this fair value gap into an inversion fair value gap, this is the first idea that I had, that I want to see lower prices. So you can see the midpoint of this daily inversion, which is usually a key level to be watching when we were using fair value gap as fair value gaps as well as inversion fair value gaps. So upon highlighting also the midpoint, I also noticed we had this yesterday's candle being an engulfing candle, right? What do I mean by an engulfing candle? This candle, we can see it had taken the previous day's high, right? We had the high being taken at around this level. You can see the high has been taken, and I didn't do the markup because it could have made this chart look dirty. Yeah, you can see that previous day high being taken by these candles high. So after seeing that, this candle are taken that, and you can see how it closed below the opening price and the closing price of this previous day. On Wednesday, this Tuesday's candle, right? So an engulfing candle, for it to be an engulfing candle in bearish scenarios, we have to see the previous day's high being taken. You can see over here the high was taken. Also, we have to see a candle closing below the low, or below the opening and the closing price of the previous day. So we have the opening of this candle at around this level, then the closing is slightly below. So this candle closed below the opening and the closing price. So for me, this was an engulfing candle, which is now to me a confluence number 2 that I'm expecting to see lower prices. So I drop onto the 4-hour time frame, and inside the 4-hour time frame, you can see I noted we had these 4-hour fair value gap, this candle's low, as well as this candle's high. So I noticed that, and this was a key level for me from which I was anticipating to see an inversion from, because I'd seen price being bullish, and I did my analysis before this candle print, and I noticed we had this fair value gap. So I was watching for this level for inversions. Also, remember we had that daily this daily Tuesday low, which if candles overlap, we could have created that immediate rebalance, which is to me the most strongest also confluence that I usually like to see, right? So I had these pink line, which I usually use pink, to those who know me, for immediate rebalances. And what do I mean with immediate rebalance is instance like this. We had these candles upper wick overlapping with these candles lower wick, creating no imbalance or inefficiency. But in this example, we have no immediate rebalance, right? Because we have these candles lower wick not overlapping with these candles upper wick, right? So creating an inefficiency. So we have no imbalance, we have no immediate rebalance in situations like this. Since I had seen the 4 hour, inside the 4 hour fair value gap, we'd seen the 4 hour fair value gap that was in close proximity to the daily immediate rebalance. So these added confluence to me, we will see an immediate rebalance from which we can see a reversal lower. Also, remember we have this daily inversion fair value gap. So this is my other confluence that I want to see the candles respect the inversion fair value gap midpoint, and this candle gave me the idea because I'd seen it close at around at exactly the midpoint, right? So after seeing that, this also added to me confluences that we are going lower. Then I dropped lower onto the 1 hour time frame. And what did I notice? Inside the 1 hour time frame, we had no fair value gap, but what I saw is we had this fair value gap that had already been rebalanced, right? Then we had this drop lower. So this to me was a bearish order block. So it was also another key level that I was watching. So I'm seeing many confluences at around this key level that give me confluence, or that give me confidence, that give me confidence that I want to see this price drop lower. We have the daily immediate rebalance, we have this daily inversion fair value gap, we also have this 4 hour fair value gap, also have the consequent encroachment of these daily inversion fair value gap. We have the candles respecting, I saw these candles were respecting the midpoint, so that added to me confluences. Also inside the 1 hour, we have an order block, right? A bearish order block. So with all that confluences, I now anticipate to see lower, but first of all I have to wait for number one, a time to come into play. So time, I usually trade during the New York session, and you can see at around 7, that's the time, to around 12, that's where I want to be looking for my confluences. Yeah, that. So you can see, as New York as we were heading during New York, we hadn't tapped into these fair value gap, the 4 hour fair value gap. So someone who had seen these movement lower had maybe entered in for a short, but for me, I was still chilled because we had this 4 hour fair value gap. So to me, this was the first fake move. Then we see price later on, and inside a New York session, we had a tap into these fair value gap, then also a drop lower. So some also who had noticed these 4 hour fair value gap, you can see the two lines. If you can remember, this is the 4 hour fair value gap. So those who are early to enter had taken their trade with maybe their stops above these, then the market rallied higher. And why did it rally higher? That's where now we had this daily immediate rebalance. So we had that daily immediate rebalance, whereby we had now the day's upper week overlap with the Tuesday lower week. So we have Tuesday, so this is the Tuesday lower week, and we had today upper wick overlapping inside the zone, inside the upper portion of this daily inversion fair value gap. So since we have that immediate rebalance, and for me this is the strongest confluences that I usually want to see. So what happened? We had that we are also inside a key level, right? Now, because we have seen everything play out, and we had news at around 9:45, right? These or heavy down close candle. It was a candle at around 9:45, right? And I really didn't want to miss the movement lower, so I dropped onto the 5 minutes time frame because these, if I could have missed these, then somehow I could have maybe gotten chopped at around this level. So I wanted to take a low risk trade, so I dropped onto the 5 minutes time frame. And what did I notice? So I noticed we had already created this immediate rebalance, right? With these it's a pink line. I'm sorry if I said orange, it's a pink line. And we had everything lining up inside this fair value gap. We have inside a key time frame. Now this price movement lower, I wanted to see a market structure shift, right? So we had this candle number one, candle number two, candle number three. We had this swing low, right? A 5 minute swing low, because a swing low is made up of three candles, right? So then this candle closed, it was a 9:35. It closed below this low, creating a market structure shift, right? And then I wanted to see how these are the next candle, because at the close of this candle, that's when I took the candle, the trade. So the market rallied higher again. Price is fractal, right? And I wanted to see if what happens after we'd seen this immediate rebalance. So we had these candles lower wick overlapping with these candles upper wick. So we created another immediate rebalance, and then this candle closed lower. Immediately, as the market, by the way, was rallying lower, I took a trade because this candle had already created the market structure shift. This bearish candle had already created the market structure shift that we wanted to see. So closing below this swing low, creating a market structure shift. Upon closing this candle rally lower, I took the trade with my stop slightly above this forward inversion fair value gap. So what happened? This candle again rallied, created an immediate rebalance, which is the strongest sign that is the strongest confluence that I use. Then we had this tank lower. Then we had this forward inversion fair value gap, which I was watching. So we have these candles low, creating a fair value gap with these candles high. It was violated, but again, since I had a bearish narrative, I wanted to see it act as a resistance, preventing higher prices. And that's what we can see inside the 15 minutes or the lower time frame. We had a lot some accumulation here. We had price accumulating at around this level before tanking lower during the PM session. So yeah, that was the trade analysis that I had today. And this is the trade that I took. As I took, immediately I placed my trade for the Audi USD, because I was looking at the Audi USD. I also took a trade for the Euro USD. I didn't mark up the Euro USD, but I did the same trade for the for the for the how can I call it, for the GBP USD. Yeah, and the same trade at around 9:35. That's when I took. Upon this candle rallying lower, I took the trade, and then my stop above this zone, right above the candles close. But what happened is we had this drop lower, we had sell side liquidity here, and currently the market has already taken the previous day's low. And now I think I left some partials open, but I've traded my stop loss to this level. And now no problem if I will be taken out, but I think I should close the trade. I took everything out, so now I can close everything because we've seen the market taking the major liquidity pools. And here is the trade for today history. The history for today is on 23rd Thursday, so you can see over there, and 23rd, and these were the trades. You can see I ended up positive, and so those were the trades. And yeah, it was a good day. I've journaled inside my book, and doing this video is another opportunity to journal. So those were the trades. Hopefully we have learned together. Hopefully we've drawn the lessons, and I've explained why I did the trades. And probably I'll be seeing you tomorrow, because our general draw on liquidity, we want to see the market deliver a lower for the Audi USD, because we had these liquidity has been grabbed. So we have the liquidity grab there, and if we take our Fibonacci tool from the highest high to the lowest low, you can see we are still inside a premium. So if we want to be buying, remember we want to see price deliver to discount. So we have this 50%, which is my red line there. So this is the 50% level. You can see this my 50 fib 0.5 Fibonacci tool, from which I'm expecting to see market retrace below that level. And before that, my draw on liquidities will be these sell side liquidities. Also, we have this fair value gap paired with also these weekly small weekly fair value gap that I did mark here. And if we go to the weekly time frame, we can spot these weekly fair value gap, because we have these candles low. So these candles are low, as well as these candles high. So this creates this fair value gap from which I'm anticipating to see price deliver to. So probably on tomorrow also will be around, and maybe targeting these sell side liquidities, as well these fair value gaps, as well as these 50% Fibonacci tool. So this is it for this video. Hopefully I'll be seeing you here tomorrow. So thank you for watching. See you later. Bye bye.